With all the high yield or ultra high yield ETFs these days across the entire stock market, there's so many good options to buy into. And I often get asked from other investors, why do I still buy SCHD these days that only has a 3.7, 3.8% starting yield, when there's so many ultra high yielders or high yield ETFs that could pay me so much more income basically right away if I were just to shift over my buying strategy. Now, my first response is kind of obvious. It's that I don't only buy SCHD, I own tons of different ETFs and stocks throughout my long-term portfolio, some of them offering a high yield, some of a low yield, and some of them an ultra high yield. And even though there's multiple different reasons on why I still buy SCHD over some of the high yield or ultra high yielders, I want to go through in today's video and share with you guys the main reason, the main metric why SCHD is still finding a spot on my daily roster as far as the ETFs and stocks I buy every single day the market's open. So if you want to see what most investors are missing when it comes to SCHD, especially when even comparing it to some of these high yield or ultra yielders, definitely stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly. Get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now, with all that, let's get back into the video. Now, so we're all on the same page here. I'm referring to the Schwab US Dividend Equity ETF SCHD, which I've been buying every single day now for around 4 years straight. I currently have around 2,600 shares altogether, which isn't the largest position in my overall portfolio, but it's definitely up there with one of them. Now, this ETF, like I mentioned, only offers around a 3.7, 3.8% yield. So out of every $100 of SCHD that I buy, I'm not receiving even near the amount of cash flow that I could receive if I bought something like jepi, like Misty, like ULTY, etc. Now, the main reason I continue to buy more and more SCHD, and I believe in this single holding as a great foundational position for the long term, is because of this right here. If you look at dividend grade and underlying metrics on Seeking Alpha, you can see, just like I mentioned, a 3.75% trailing 12-month yield. Again, not the best, not the worst, even though I guess it's pretty bad comparing it to some of these high yield and ultra high yielding ETFs across the market these days. But this is what I'm really talking about here, the dividend growth rate. The amount of income this ETF has paid investors year over time has not only went up at a very fast rate, but it's grown at one of the most consistent and fastest rates across all other ETFs in the stock markets. I mean, if you zoom all the way out, the dividend growth rate for SCHD on the 10-year is around 11% per year. That means that investors that bought SCHD a long time ago are not only getting paid more in dividends, but getting paid significantly more, around 3 or 4 times more income from when this ETF started trading. Now, of course, we have to take this with a grain of salt, but it says right here in Trading Economics, the United States inflation rate is somewhere up around 3% per year. Now, again, take it with a grain of salt. A lot of us seem to think it's a lot higher than that. But just for argument's sake, this means that if you right now are building out a long-term portfolio, you really should be buying into different stocks and ETFs that not only are paying you, and of course, as dividend investors, we want to get paid, but also getting paid more and more over time is not only going to help you just exceed your future expenses, but also hopefully exceed the future inflation rate. Now, this means that even if the future inflation rate, let's say it's 4%, 5%, 8%, hopefully with the 11% dividend growth increase year over year that SCHD has shown investors for a while now, hopefully this will not only maintain your portfolio and your income levels compared to inflation, but hopefully exceed them. Now, it's not only the fact that SCHD's dividend growth will hopefully keep up with inflation, but if you even do some basic math over a very long time frame, if you look into what an investment would look like long term, I'm not talking 1 year, 2 years, you look at what dividend growth does to a long-term portfolio. If, of course, it keeps growing like it has historically, which that's all we have to go off of right now. Based off of a $10,000 investment and then $100 per week added into the portfolio from there, SCHD's 3.78% yield, 11% annual dividend increase, 3% share price increase, this is 30 years invested. So currently I'm 33 years old. This will bring me to 63 years old. Off of that initial $10,000 investment, if you just bought SCHD, let the dividends get reinvested over time, that $10,000 will not only compound, but long enough in the future when the compounding curve really starts to grow sharply, we're talking an ending balance of $4.4 million. Now, before you say, well, we have no idea what's going to happen with SCHD in the future, is the expected annual dividend amount increase percentage going to stay at 11%? Is it going to drop to 10%, to 5%, to 8%? Of course, anything can happen in the future. I'm just for fun going off of some basic numbers we have to go off of and showing you what a $10,000 initial investment plus $100 per week beyond that could potentially look like in the future. So does every dividend investor out there need to buy into SCHD because this ETF has offered tons of dividend growth? The answer to that is absolutely not. Every investor out there needs to find different stocks and ETFs that match exactly what they're looking for. But for me personally, I like to have a mix of both dividend growth names in my portfolio, some high yield and even some ultra yielders, along with some pure growth names too. I consider myself more of a hybrid investor that wants to see my net worth grow over time, but I also want to get paid cash flow and more cash flow as the years go on. So don't get me wrong, although I know there's tons of great high yield and ultra yield and ETFs throughout the market these days, a lot of them have outperformed SCHD and others by a long shot. I still want you to consider and at least mess around with some of these dividend growth ETFs and stocks and see what potentially things could look like long into the future if of course you're looking to build out a long-term portfolio. So now that I share with you guys why I'm still buying SCHD, even though it's yielding much less than lots of the other hyped up high yield and ultra yield names throughout the market these days, I lastly, most importantly, have a question for you guys down below. When it comes to a tried and true foundational position, whether it's SCHD, whether it's VU, or whatever the case might be, what is your foundational position you're building, just like mine is SCHD? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.